All right, so today we're going to be diving into something that I think is super relevant to pretty much everyone listening,
Mhm.
whether you're, maybe thinking about buying a house or starting a business, or even if you just want to feel like you've got a better grip on your finances.
Right.
We're talking all about credit history and how that impacts the way you should be thinking about your budget.
Yep, sure.
We're going to be looking at an article called How Credit History Impacts Your Budgeting Strategy.
Great article.
Yeah. And I think, you're really going to want to take some notes on this one because,
Lots of good stuff in there.
yeah. So, did you know that your credit score is kind of like a GPA, but for your finances?
I like that analogy.
Yeah.
Yeah, it is. It really is.
It can open doors to getting better interest rates on loans.
For sure.
And that's a big deal, right?
Huge.
And get this, a good score could actually save you tens of thousands of dollars over the life of a loan.
Easy.
So, we're talking like a free vacation right there.
Yeah, absolutely.
Yeah.
It's not just about, getting approved for loans either.
Right.
It's about getting approved for the best terms.
Yeah, yeah.
Like we're talking about putting more money back in your pocket just because you understand how this whole credit thing works.
Okay, so I think we should start with the basics.
Yeah.
What exactly is credit history, and why should we care about it so much?
Well, think of it like your financial resume.
Okay.
Every time you borrow money,
Hmm.
use a credit card, even pay a bill, it all gets recorded on this resume.
Uh-huh.
And so lenders use this history to see how responsible you are with money.
Right.
Are you the kind of person who pays back what you borrow on time? Or, are you maybe a little riskier?
So it's like a report card, but for our money habits.
Exactly.
Okay.
And just like a good report card can get you into a good college, a good credit history can open up better financial opportunities for you.
I like that.
Yeah. And, another thing is knowing your credit history can help you spot areas where you might need to improve or even catch any errors that could be dragging your score down.
Oh, that's a good point.
Yeah.
Okay, so we've got this credit history down,
Right.
but then there's this whole credit score thing.
Yeah.
It seems like it's just this, like, three-digit number.
Hmm.
Like, how much power can it actually have?
More than you might think.
Really?
Yeah, it's like a snapshot of your whole credit history condensed into a single number that lenders use to assess your financial health.
Okay.
And this number can impact everything
Wow.
from, the interest rate you get on a car loan to whether or not you qualify for a mortgage.
So a good score is like having a VIP pass in the financial world.
Exactly. It's like a golden ticket that unlocks lower interest rates on loans,
Yeah.
and that can save you thousands of dollars over time.
That's huge.
Yeah. For example, let's say you get a mortgage with an interest rate. That's a full percentage point lower than someone with a lower score. That could easily add up to like $20,000 in savings over the life of your loan.
Wow. Okay, that is huge.
Yeah.
But what about people who, maybe they don't have the best credit history,
Yeah,
or
yeah,
people who are just starting out and haven't had a chance to build a lot of credit yet?
Yeah, great questions.
Yeah.
There's absolutely hope.
All right, good.
And we'll dive into some strategies for building and improving your credit score later on in the deep dive.
Okay.
But first, I think it's important to talk about how your credit history actually plays into creating a budget that, works for you.
Okay, so how does knowing this, our financial report card, how does that actually help us make smarter choices about how we're spending and saving?
It all comes down to understanding the power you have to shape your financial future.
Okay.
By knowing your credit history and your score, you can start making smarter decisions about how you manage your money.
Okay.
You can prioritize paying down debt that might be holding you back.
Right.
You can negotiate for better interest rates on loans.
Right.
And even make sure you're getting the best deals on things like insurance.
So it's like having this secret weapon.
Exactly. It's all about taking control, being proactive.
I like it.
Yeah.
Okay, so let's say you're thinking about applying for a loan,
Mm-hmm.
whether it's for a house or a car or, to finally start that business you've been dreaming of.
Right.
How does your credit history come into play when you're trying to get approved for that loan?
Well, when you apply for a loan, lenders pull your credit report to see how you've handled debt in the past.
Mm-hmm.
They're looking for patterns of responsible behavior, like paying your bills on time and, keeping your credit card balances under control.
So it's like they're checking our references,
Exactly.
but for our money habits.
Yeah.
Okay.
A good credit history tells lenders that you're a reliable borrower who's likely to repay the loan on time,
Right.
which makes you a less risky investment for them.
Makes sense.
And that means they're more likely to approve you and offer you better loan terms.
Okay, so what happens if our credit history isn't so stellar? Yeah.
Does that mean we're automatically out of luck?
Well, it definitely makes things more challenging.
Okay.
Lenders might be hesitant to approve your application,
Right.
or they might offer you higher interest rates to kind of compensate for that increased risk,
Got it.
which is why it's so important to, start building a good credit history as early as possible
Right.
and to, work on improving any negative marks on your report that might be holding you back.
Yeah, nobody wants to be stuck with higher interest rates.
Nope.
Speaking of interest rates,
Yeah.
can we talk about what those actually are and why they matter so much?
Sure. So think of interest rates as like the price you pay to borrow money.
Okay.
It's like a rental fee for using someone else's money.
Okay.
And just like rent prices vary depending on, the location or the amenities.
Right.
Interest rates can vary widely too,
Right.
based on factors like your credit score, the type of loan you're getting, and even just the overall economic climate.
So the better our credit score, the lower the rent we have to pay on borrowed money.
Yeah.
Exactly. A good credit score shows lenders that you're a responsible borrower
Right.
who's likely to repay that loan on time,
Mm-hmm.
which means you're a lower risk for them and they're more willing to offer you a lower rate.
So it's like getting a discount on all your borrowing needs.
Pretty much, yeah.
That's amazing.
It really is.
Okay, so we've talked about how a good credit score can help us get approved for loans
Right.
and snag those awesome low interest
Mhm.
rates. But how does all of this tie back into creating a solid budget?
Well, think of your credit history and score as like the foundation
Okay.
upon which you build your budget.
Okay.
It's like knowing the lay of the land before you start building your dream home,
Okay.
right? By understanding those two things, your credit history and your score,
Mhm.
you can start making more informed decisions about how you're managing your money.
So it's not just about tracking our spending and saving.
Mhm.
It's about understanding the bigger picture of how our credit impacts our entire financial health.
Absolutely. That's where it gets really interesting.
Okay, I like where this is going.
Yeah. So let's dive into some specific budgeting strategies that can help you kind of leverage your credit to your advantage.
Okay, let's get strategic.
Uh,
I'm ready to unlock those financial superpowers.
All right. So first things first,
Oh,
let's talk about the importance of tackling debt strategically.
debt repayment.
Yeah.
Doesn't that sound kind of boring?
I know it might not be the most exciting topic,
Yeah.
but trust me, this is where you can really see the power of your credit history at work.
Okay, you've got my attention.
All right. So imagine this. You're carrying a bunch of debt,
Mm-hmm.
maybe from credit cards, student loans,
Yeah.
or even a car loan.
Mm-hmm.
And those high interest rates are like little gremlins just eating away at your hard-earned money.
Gremlins. Okay, now I'm really paying attention.
All right, so by prioritizing that debt repayment and using some smart strategies to tackle those balances,
Okay.
you can not only free up more money in your budget, but also boost your credit score in the process.
So it's like a double win.
Exactly, a double win.
I like it.
Yeah, so let's talk about some of the popular methods for crushing debt,
Okay.
like the snowball and avalanche approaches, and we'll figure out which one might be right for you.
Okay, let's talk about those debt slaying strategies.
Let's do.
Bring on the snowball and the avalanche.
So the snowball method focuses on paying off your smallest debts first, regardless of their interest rates.
Okay.
This approach can give you some quick wins and motivation to keep going.
It's like gaining momentum with each victory.
Right, exactly. And then there's the avalanche method, which targets the debts with the highest interest rates first.
Okay.
While it might take a little longer to see those initial wins, with the snowball,
Mm-hmm.
this approach can save you more money in the long run by minimizing the amount of interest you accrue.
So it's all about choosing the method that really aligns with your personality and your financial goals.
Exactly.
Okay.
And regardless of which method you choose, the key is to create a budget that allows you to allocate a consistent amount towards that debt repayment each month.
Okay, so we've tackled those debt gremlins.
We did.
What's next on our budgeting adventure?
Well, let's shift gears and talk about something a little more fun, planning for those exciting future expenses.
Okay.
Yeah.
All right, so we've slayed those pesky debt gremlins with our snowball and avalanche methods.
That's right.
But now let's talk about planning for the future.
Yes.
We're talking dream vacations,
Mm-hmm.
down payment on a house, maybe even starting your own business.
It's all about, moving beyond just surviving and starting to thrive financially.
I like it.
So we're going to talk about how to build those dreams into your budget.
Okay.
So they're not just wishful thinking,
Right.
but concrete goals that you're actively working towards.
Love that idea.
Yeah.
But let's be realistic. Sometimes it feels like all my money just disappears into bills and, just everyday expenses.
Yeah.
How can I possibly find room in my budget for big, exciting future goals?
It's all about prioritizing and being intentional with your spending.
Okay.
It might seem impossible at first, but even small changes can make a huge difference over time.
Okay.
It's a marathon, not a sprint.
So where do we start? Do we need to, become extreme coupon clippers?
No, not necessarily.
Okay.
It's more about, making conscious choices.
Okay.
Finding a balance that works for you.
Okay.
Maybe you swap that daily latte for a homemade brew a few times a week.
Okay.
Or, explore some free or low-cost entertainment options instead of always, going out.
So it's about finding those little tweaks that can free up some cash flow
Exactly.
without making us feel like we're totally depriving ourselves.
Yeah,
Okay, I can get behind that.
for sure. And once you start finding those extra dollars, it's time to put them to work for you by investing in your future.
Okay, I'm ready to invest, but where do I even begin? This whole world of investing can feel really intimidating.
It definitely can be,
Okay,
but it doesn't have to be overwhelming.
good.
A great place to start is by setting up a separate savings account,
Okay,
specifically for your long-term goals. Think of it as like your dream fund.
a dream fund. I love that.
Yeah,
It's like a piggy bank, but for grown-up goals.
exactly. And once you have that account set up,
Hmm.
you can start making regular contributions.
Yeah.
Even if it's just a small amount each month.
So even if I can only spare like $20 a week,
Absolutely.
it's still worth it to start building that dream fund.
Consistency is key when it comes to saving. And thanks to the power of compound interest, even small contributions can add up big time over time.
Compound interest. That sounds like some kind of financial magic.
It kind of is.
Okay.
Compound interest is essentially interest earned on interest.
Okay.
It's like a snowball rolling downhill, getting bigger and bigger over time.
I am definitely starting my dream fund today.
I love it.
But what about those unexpected expenses that always seem to pop up at the worst possible time?
Yeah.
How do we factor those into our budget and still stay on track with our savings goals?
That's where having a solid emergency fund comes in.
Okay.
It's like a financial safety net that can help you navigate those unexpected bumps in the road without completely derailing your progress.
Okay, I've heard about emergency funds, but
Yeah.
honestly, saving up 3 to 6 months worth of living expenses just feels daunting.
It can feel overwhelming at first,
Yeah,
but remember, building an emergency fund is a journey, not a sprint.
right.
Start by setting a small, achievable goal, like saving $500 or $1,000.
Okay.
And once you reach that milestone, set a new goal and just keep building from there.
So it's like leveling up in a video game.
Exactly.
Yep.
Each time you reach a new savings milestone, you unlock a new level of financial security and peace of mind.
Okay, I'm ready to level up my savings game.
I love it.
What are some practical tips for actually making this happen?
Sure, one strategy that can be really helpful is automating your savings.
Okay.
So set up automatic transfers from your checking account to your savings account each month.
Okay.
Even if it's just, a small amount,
Yeah.
you'll be surprised how quickly it adds up.
Ooh, I like that it's like paying yourself first. What other ninja saving moves do you have up your sleeve?
Well, another tip is to regularly review your expenses and look for areas where you could maybe cut back.
Okay.
Maybe you can negotiate a lower rate on your cable bill or, find a cheaper cell phone plan.
So it's about being a savvy consumer,
Yeah,
making sure I'm getting the best deals.
exactly. It's all about being mindful of your spending
Right.
and making choices that align with your financial goals.
Okay, I'm feeling empowered to take control.
That's great.
But before we move on,
Yeah,
can we circle back to credit scores for a minute?
for sure.
We've talked about why they're so important, but how can we actually improve them?
That's a great question. So improving your credit score is a journey. It's not a quick fix.
Okay.
But there are some proven strategies that can help you boost your score over time.
Okay, let's hear them.
All right, so one of the most important things you can do is pay your bills on time consistently.
Right?
This shows lenders that you're reliable and responsible with your financial obligations.
So no more late payment fees.
No more late payment fees that can really damage your credit score. So setting up reminders or automatic payments can be a lifesaver.
Noted. What else can we do?
Another key strategy is to keep your credit utilization low.
Credit utilization? Remind me what that is again.
Sure, so it's the percentage of your available credit that you're currently using.
Okay.
So for example, If you have a credit card with a $10,000 limit
Uh-huh.
and you currently have a $2,000 balance,
Okay.
your credit utilization ratio is 20%.
Okay, got it. So why is it important to keep that ratio low?
Lenders see high credit utilization as a sign of potential risk.
Okay.
It suggests that you might be relying too heavily on credit
Right.
and could have trouble managing your debt.
Yeah.
So you want to aim for a ratio below 30%
Okay.
to show lenders that you're using credit responsibly.
So it's not just about paying on time. It's about being mindful of how much of our available credit we're actually using.
Exactly. It's all about finding that sweet spot
Right.
and, demonstrating those healthy credit habits.
Okay, I'm starting to see the bigger picture here. But what about people who are starting from scratch with credit?
Yeah.
Or those who, maybe made some mistakes in the past and are trying to rebuild their credit history?
Yeah. There are definitely options available even if you're starting with a blank slate or, working to overcome some past credit challenges.
Okay, tell me more.
All right. So one option is to consider a secured credit card.
Okay.
It's like a training wheels version of a regular credit
Sure.
card
Okay,
where you put down a deposit that acts as collateral.
got it.
And that helps you build a positive credit history without exposing the lender to a lot of risk.
So it's like a safe way to dip our toes into the world of credit.
Exactly.
Yeah.
And as you use the card responsibly and make on-time payments, you'll start building that positive track record that can help you qualify for unsecured cards
Right.
with, better terms and rewards in the future.
That's reassuring to know.
Yeah,
It feels like there's a path forward no matter where we're starting from.
absolutely. And
Yeah.
remember, building good credit takes time and effort,
Right.
but the rewards are definitely worth it.
Okay. I'm feeling motivated to keep learning and keep leveling up my financial game.
I love to hear that.
What else should we explore in this deep dive into credit and budgeting?
Well, there's one more crucial element we need to talk about,
Mhm.
and that's regularly checking your credit report.
Okay, I've heard of credit reports before,
Hmm.
but honestly, they seem kind of confusing.
Yeah, they can be.
Can we break down what they are and why we should actually care about them?
Of course. So your credit report is basically a detailed financial history.
Okay.
It outlines all of your credit accounts, your payment history, even inquiries from lenders.
Mhm.
And it's essentially the source document that lenders use to calculate your credit score.
So it's like the behind-the-scenes blueprint for our credit score.
Exactly.
Okay.
And that's why it's so important to check it regularly.
Okay.
You want to make sure that all the information is accurate and up to date.
Because mistakes, it can happen.
Absolutely. It's not uncommon to find errors on your credit report. Yeah, things like incorrect account information payments that were mistakenly marked as late, or even accounts that don't belong to you at all.
Oh, wow. That sounds like a nightmare.
It can be. Yeah. So how often should we be checking our credit report?
That's a good question.
You can actually access your credit report for free once a year from each of the 3 major credit bureaus.
Wait, it's free.
It is.
I had no idea.
Yeah, it's a super valuable resource that could really help you stay on top of your credit health.
Okay, so we know that we need to check our credit reports regularly.
Right?
But what happens if we find errors?
Mm-hmm.
How do we go about getting those fixed?
That's a great question. And the article we're looking at actually provides some guidance on how to dispute any inaccuracies on your credit report.
Okay, tell me more.
All right, so the process usually involves contacting the credit bureau directly,
Okay.
either online, by phone, or even by mail,
Okay.
and providing detailed information about the errors you found.
Okay.
And it's super helpful to include documentation to support your claim, like account statements or payment confirmations.
So it's important to keep good records of all of our financial transactions.
Absolutely. Having that documentation ready can really streamline the whole process
Okay.
and increase your chances of getting those errors corrected.
Okay. I'm feeling empowered to be my own credit advocate.
I love it.
What other insights can we get from our credit reports?
Your credit report can also give you some really valuable insights into your spending habits and, potential areas where you could improve.
So it's like a financial self-assessment tool.
Exactly. By analyzing the information in your report,
Okay.
you can identify patterns like, maybe high credit card balances or a history of late payments. That might be impacting your score.
Wow, I never thought of my credit report as like a tool for self-reflection.
It can be.
That's really eye-opening.
Yeah. And it could be a really powerful catalyst for making positive changes in your financial habits.
Okay, I'm feeling inspired to take a deep dive into my own credit report and just see what I can learn about myself.
Oh.
But before we wrap up this first part of our deep dive,
Yeah.
can we revisit budgeting for a minute?
Of course.
I just want to make sure I've got all the tools and strategies I need to create a budget that really works for me.
Absolutely.
Yeah.
So let's talk about some practical tips for crafting a budget that, helps you manage your expenses, prioritize your savings, and stay on track with those financial goals.
Okay, let's get practical.
Let's do it.
I'm ready to create a budget that's not just like a boring spreadsheet,
Yeah.
but like a roadmap to financial freedom.
I love that. So the first step is to track your spending.
Okay.
You need to understand where your money is going before you can start making adjustments.
So no more wondering where all my money went at the end of the month.
Exactly. And
Good.
there are tons of great budgeting apps and tools out
All
there
right.
that can help you track it automatically. Or you can go old school with a pen and paper.
Uh-huh.
The important thing is to find a method that works for you and stick with it.
Okay, I'm ready to become a master spending cracker.
Awesome.
So what's next?
So once you have a clear picture of your spending patterns, it's time to create a realistic budget
Okay.
that aligns with your income and expenses.
Okay, so how do we go about doing that? Is there some secret formula or a template we should be using?
There's no one-size-fits-all approach to budgeting.
Okay.
The key is to find a method that really works for your personality and your lifestyle.
So it's about customization, finding what feels right for me.
Exactly. Some people prefer those detailed budgets that break down every dollar,
Right.
while others prefer a more general approach that just focuses on broad spending categories.
Right. It's all about finding what helps us feel empowered and in control of our money.
Exactly. And remember, your budget is a living document.
Okay.
It's okay to adjust it as needed based on your
Mhm.
changing circumstances and goals.
I'm starting to see that budgeting doesn't have to be like this restrictive, boring thing.
It shouldn't be.
It can actually be a tool for creating the life we want.
Exactly. It's all about making conscious choices and aligning your spending with your values and aspirations.
I'm feeling inspired to ditch the fear and embrace the power of budgeting.
I love it.
Okay, so what other gems of wisdom do you have to share before we wrap up this part of our deep dive?
One final tip. Don't be afraid to seek help if you're struggling
Okay.
to manage your finances or create a budget that works for you.
So it's okay to ask for support.
Absolutely. There are so many great resources available,
Okay.
from financial advisors to credit counseling agencies to even just online communities.
That's really reassuring to know. It feels like we're all in this together.
We are. And remember, building a healthy relationship with money is a journey, not a destination.
Okay.
There will be bumps along the road,
Right.
but with the right knowledge and perseverance and, a willingness to seek support when you need it,
Yeah.
you can achieve your financial goals and create a future you love.
Okay. I'm feeling ready to tackle those bumps and embrace the journey.
Awesome.
This deep dive has been so insightful
Right.
and empowering.
I'm glad to hear that.
So what's next on our agenda?
Well, let's move into the final part of our deep dive,
Okay.
where we'll bring all of this knowledge together
Okay.
and talk about taking action.
All right, let's do it.
All right, so we've covered a ton of ground in this deep dive.
We have.
From understanding our credit history and scores to actually crafting a budget that, supports our dreams.
Right.
But now it's time to shift gears and talk about the most important part, taking action.
Yes, let's get things moving.
All right, so knowledge is power, but only if we put it to use.
Right.
We've explored a lot of concepts and strategies, but now it's time to translate all of that learning into real-world results.
Okay, but with so much information swirling around, where do we even begin?
Well, the article emphasizes one key point, and that is to start by reviewing your credit report regularly.
Okay.
Think of it as like a financial checkup.
Okay.
It allows you to catch any errors or discrepancies that could be, dragging down your score.
We talked about how to do that earlier, but
yeah.
can we quickly recap why this is so important?
Absolutely. Your credit report is basically a detailed financial history that lenders use to evaluate your creditworthiness.
Okay.
And it includes information about, your credit accounts, your payment history, even inquiries from lenders.
Okay.
So by reviewing your report regularly, you can make sure all that information is accurate and up to date.
So it's like making sure our financial resume is polished and ready to impress.
Exactly. And remember, you're entitled to a free credit report from each of the 3 major credit bureaus,
Right.
Equifax, Experian, TransUnion, once a year.
Perfect. Okay, so we've got our credit reports in hand. What happens if we spot something that seems off? Like an error or an account that doesn't belong to us?
You have the right to dispute any inaccuracies on your credit report.
Okay, good.
The article outlines the steps involved,
Right.
but we can break those down quickly.
Okay, let's talk about how to fix those credit report blunders.
All right, so the process usually involves contacting the credit bureau directly
Okay.
and providing detailed information about the errors you found.
Hmm.
And it's helpful to include documentation
Right.
to support your claim, things like account statements or payment confirmations.
So it's like being a detective gathering evidence to prove our case.
Exactly. By being proactive and advocating for yourself, you can make sure that your credit report accurately reflects your financial history.
Okay, I'm feeling empowered to take charge of my credit report.
Good.
But what about those of us who are starting from scratch with credit?
Hmm.
Or, maybe we've made some missteps in the past and we're trying to rebuild our credit now.
Yeah, it's never too late to start building a positive credit history.
Okay, good.
Remember, your credit score is a reflection of your current financial habits, not just your past.
That's encouraging.
Yeah. And the article highlights a few strategies that can be helpful for those who are new to credit or are working to rebuild their history.
Okay, let's dive in.
So one option is to consider a secured credit card.
Okay.
It's a great way to establish credit if you're having trouble getting approved for a traditional credit card.
We talked about secured cards earlier, but can you remind me how they work?
Sure. So with a secured card, you put down a deposit that acts as collateral,
Right.
which minimizes the risk for the lender.
Mm-hmm.
And this allows you to start building a positive credit history by using the card responsibly and making on-time payments.
So it's a low-risk way to prove that we can handle credit responsibly.
Exactly. And as you build a positive track record with that secured card,
Right.
you'll increase your chances of qualifying for unsecured cards with better terms and rewards in the future.
Okay, that's a great stepping stone. Are there any other strategies that can help us build credit from scratch?
Another option is to become an authorized user on a responsible person's credit card.
Oh, okay.
This lets you benefit from their positive credit history,
Uh-huh.
which can give your own score a little boost.
So it's like having a credit mentor
Yeah,
to help us learn the ropes.
exactly. But it's important to choose someone who has a solid track record of using credit responsibly. And make sure you understand the terms and conditions of being an authorized user.
Good advice. Okay, so those are some great tips for people who are new to credit.
Mm-hmm.
But what about those of us who are already established and we're just looking to bump up our credit score even further?
Yeah, so one of the most impactful things you can do is focus on paying down your existing debt,
Okay.
especially, high interest debt like credit card balances.
Right. We talked about the snowball and avalanche methods earlier for repayment.
Mm.
Can we quickly recap those?
Absolutely. So the snowball method involves focusing on paying off your smallest debts first, regardless of the interest rates.
Right.
And this can create a sense of momentum and motivation.
Yeah, like those small wins that just keep you going.
Exactly. And then there's the avalanche method,
Mm-hmm.
which involves tackling the debts with the highest interest rates first.
Okay.
While it might take a little longer to see those wins with this method,
Right.
it can save you more money in the long run
Right.
by minimizing the amount of interest that you're paying.
So it's about picking the method that best aligns with you.
Yeah, with your personality and your financial goals.
Right, exactly.
And no matter which method you choose, the key is to create a budget that allows you to consistently put money towards that debt repayment each month.
Consistency is key for sure, but what about those unexpected expenses
Yeah.
that always seem to pop up at the worst possible time?
Right.
How do we protect ourselves from those financial curveballs?
That's where having a solid emergency fund comes in handy.
Right.
It's like a financial safety net
Okay.
that can help you navigate those unexpected bumps in the road without, completely derailing all of your financial progress.
Okay. I'm convinced an emergency fund is super important.
Mm-hmm.
But honestly, the thought of saving up 3 to 6 months worth of living expenses, it's daunting.
I get it. It can be.
Yeah.
But any tips for making that seem less overwhelming? Start small.
Okay.
Set an achievable goal,
Okay.
like saving $500 or $1,000. And once you reach that milestone, celebrate that success and then set a new goal.
To break it down into smaller steps.
Exactly.
Okay.
And remember, even those small contributions, they add up over time,
Right.
especially with that compound interest magic working in your favor.
Compound interest is my new best friend.
It's a powerful force.
Yes, it is.
And, it's one of the many reasons why starting to save and invest early is so important.
Okay. I'm feeling motivated to keep learning and keep growing and keep taking action.
I love that this deep dive has been such an incredible journey.
It really has.
And, remember, your credit history and your budgeting strategy. These are two things that are so closely intertwined,
Mm.
and they can significantly impact your overall financial well-being.
Right.
By understanding how they work together and taking those proactive steps to manage them wisely,
Right.
you can create a brighter and more secure financial future for yourself.
This has been so eye-opening. I feel like I've gained a whole new level of understanding and confidence when it comes to, my finances.
That's what we like to hear.
Yes.
Remember, knowledge is power.
Yes.
And when it comes to your finances, you have the power to shape your own destiny.
Thank you so much for joining us on this deep dive into the world of credit and budgeting.
Of course.
We hope you found it as insightful and empowering as we have.
Absolutely.
And until next time, happy budgeting.
Existing debt, especially, high interest debt like credit card balances.
Right. We talked about the snowball and avalanche methods earlier for repayment. Can we quickly recap those?
Absolutely.
Right.
So the snowball method involves focusing on paying off your smallest debts first, regardless of the interest rates.
Right.
And this can create a sense of momentum and motivation.
Yeah, like those small wins that just keep you going.
Exactly. And then there's the avalanche method,
Mm-hmm.
which involves tackling the debts with the highest interest rates first.
Okay.
Well, it might take a little longer to see those wins with this method. It can save you more money in the long run
Right.
by minimizing the amount of interest that you're paying.
So it's about picking the method that best aligns with you.
Yeah, with your personality and your financial goals.
Right, exactly.
And no matter which method you choose, the key is to create a budget that allows you to consistently put money towards that debt repayment each month.
Consistency is key for sure. But what about those unexpected expenses
Yeah,
that always seem to pop up at the worst possible time?
right.
How do we protect ourselves from those financial curveballs?
That's where having a solid emergency fund comes in handy.
Right.
It's like a financial safety net
Okay.
that can help you navigate those unexpected bumps in the road without, completely derailing all of your financial progress.
Okay, I'm convinced an emergency fund is super important.
hmm
But honestly, the thought of saving up 3 to 6 months worth of living expenses, it's daunting.
I get it. It can be.
Yeah.
But any tips for making that seem less overwhelming? Start small.
Okay.
Set an achievable goal, like saving $500 or $1,000.
Okay.
And once you reach that milestone, celebrate that success and then set a new goal.
So break it down into smaller steps.
Exactly.
Oh,
And remember, even those small contributions, they add up over time,
right?
especially with that compound interest magic working in your favor.
Compound interest is my new best friend.
It's a powerful force.
Yes, it is.
And, it's one of the many reasons why starting to save and invest early is so important.
Okay, I'm feeling motivated to keep learning and keep growing and keep taking action.
I love that this deep dive has been such an incredible journey.
It really has.
And, remember your credit history and your budgeting strategy. These are two things that are so closely intertwined,
Mm-hmm.
and they can significantly impact your overall financial well-being.
Right.
By understanding how they work together and taking those proactive steps to manage them wisely,
Right.
you can create a brighter and more secure financial future for yourself.
This has been so eye-opening. I feel like I've gained a whole new level of understanding and confidence when it comes to, my finances.
That's what we like to hear.
Yes.
Remember, knowledge is power.
Yes.
And when it comes to your finances, you have the power to shape your own destiny.
Thank you so much for joining us on this deep dive into the world of credit and budgeting.
Of course.
We hope you found it as insightful and empowering as we have.
Absolutely.
And until next time, happy budgeting.